Now let's dig a little bit into the global marketplace of oil and other risky assets, with Bitcoin reportedly beating US banking giant JP Morgan today in market value. But let's start with the latest OPEC monthly report for January as we turn to Uchenna Minnis, the managing partner at Minnis Asset Management. Uchenna, good evening, and thanks for coming through.
Thank you, boss, and thank you for having me.
Great, thank you so much. Let's start with OPEC. Why are you surprised that OPEC left its market outlook unchanged but raised uncertainties around the global economic outlook?
I mean, I think for me, one of the groups that have been very, should I say, evolving in terms of learning their processes and learning from the past, I would say it's the OPEC, this block, because I feel what they have done is they've understood from their recent history that you cannot be too aggressive in taking decision or making decisions or creating policies as regards to production cuts and just adjusting to balance the market because of what we've seen coming from the pandemic, and I think they've taken that into consideration and have been very careful in terms of making hasty decisions that will probably be too proactive for or too slow to sort of react to. And when it comes to the uncertainty, as you've mentioned, so far we have this war from that involves one of the behemoths of the energy space, Russia. That is always going to be a risk to OPEC, and that they need to consider and put into their consideration when looking at their market outlook, Boston.
Oil producing group says there could be an increase in a few countries or in terms of output like Nigeria. Are you optimistic as well as the OPEC Plus?
I mean, if you check recent trends, Nigeria has actually shifted from being a very, should I say, consistent laggard over the years and into meeting their production quota as regards to, we know, the policies that have been put in place. Maybe we could say it's political, but however, it's how consistent and how sustainable these policies are to continue to curb theft in the country. And I think if this can be curbed, I think given the fact that production companies are also looking at maximum output, I think we might continue to be in that spaces of meeting our production quota. And I think that is the case with a number of these countries too. A number of these countries are trying to optimize their infrastructure to meet their production quotas. And that's what we're seeing across board, Boston.
Oh, great. So we talk about oil. Let's talk about Bitcoin. Bitcoin today beats JP Morgan in terms of market value. Uchenna, talk to me. How do I read these tea leaves as a global market analyst? Talk to me. So Bitcoin is bigger, has more value than JP Morgan.
I mean, Boston, it's just market capitalization. I don't know why anyone is excited about that. However, if we look at this digital currency, we know it has significantly underperformed this year. The argument has always been that this is what's supposed to be an orthodox, should I say, safe haven for investors and retail players. But we're seeing that since there is the liquidity squeeze, given aggressive hike in interest rate, we can see that even Bitcoin needs liquidity. So what we're seeing now is we're just seeing some sort of, should I say, short squeeze, as we'll call it in the market, where people are taking their profit as they have short this digital currency. So I'm not really excited. I think Bitcoin is in a significant downside bearish market, and I think there might be a continuous move to the downside. So for me, it's just one of those news that you just shrug to the side, Boston.
So right now, if you're looking at all of this, we've seen the major meltdown last year, about $1.2, $1.3 trillion in the crypto valuation around the world. Well, what's your outlook on risky assets? Let's start with the crypto family first, then we'll talk about the dollar itself. Since Saudi Arabia says it's looking to find an alternative to US dollar in terms of a trade exchange.
Yeah, I mean, it's clear, as I said, Bitcoin is not what has been claimed by a lot of the, should I say, followers, so to speak. It's not the safe haven. It's not what you consider as a stable asset for you to put your funds in. However, there's still more to learn across this currency, this digital asset. And I think it has come to the point where people are just trying to understand what the level of trustworthiness there. And I think once that can be figured out across regulatory agencies, I think then we can consider that as a suitable, viable asset. As where when it comes to the US dollar, I mean, it's clear what this is. I mean, the Federal Reserve has sort of highlighted that yes, they will continue to hike interest rate, but it will be at a slower pace compared to what we've seen in the last three hike sessions, as it were. But for me, it still puts the US dollar as a place to go in terms of its yield, and I think that's what we'll be seeing going into 2023: a higher yield in the US dollar.
But if I'm looking at the first quarter, technically, in terms of where you think the market would really be, how do you think I can position right now if I'm trading the dollar among other major peers in that particular basket, looking at the entire market volatility, what expectations are for the US FOMC on January the 31st until February the 1st? How do you think folks will tend to position ahead of that? We have just about 2 weeks.
I think for me, US dollar will still outperform a number of its G7 counterparts. I know if I would want to play in this space, I know the Eurozone are sort of struggling given the fact that the proxy risk setup when it comes to their dependency on Russian gas and energy. That has sort of increased purchasing power inflation around there. And I think on the basis of that growth differential between the US and Eurozone, I think it's a good place for you to short the Euro USD. I'll also play around the GBP USD too. The British pounds, there's a slowdown in terms of growth pace compared to the US. That's another currency that you can look to. To short as regards compared to the strength of the US dollar and against the British pounds or the British economy. Another place you can look at is the USD GPY, the Japanese yen. Is a place for you to go long, given the fact that we believe that the opening of China into from the lockdown protocols in place all through last year, we believe that the world demand would increase, and at the point as a result of that, we will expect that discrepancies to sort of or disruption to go into the Japanese in terms of their production output. So if you look at that, I think is a good place to also buy the USD Japanese yen. So I mean, I think those three currencies pairs are places that people can play in if they are looking to just go into currency pairs.
Interesting. Thank you so much. Enjoy the rest of your evening. Uchenna Minnis, Global Market Strategist and the Managing Partner at Howard Minnis Asset Management. Thank you so much for your time.